Hello and welcome back, everyone, to the Pulse here, hosted by the PeakBot team. I am Dillon, joined by my co-founder and co-host Ben here. Ben, how you doing this morning?
Fantastic. Lovely Monday morning.
Happy to hear that. Happy to hear that. Before we even get into it, if anybody wants, and I didn't run this by Ben, so we'll see how he reacts.
Here we go.
If anybody wants one of these hats that Ben's wearing here, this PeakBot little trucker hat here, automated investing, let us know. Throw it in the chat or text us to the number on screen. They are for sale. Okay.
I'm just glad you didn't say we were giving them away for free.
Not giving them away. They're for sale. All right. If you want an automated investing PeakBot trucker hat, let us know. We'll get you a discount and we'll get that sent to you immediately. So anyway, excited to go through another week of trading here for our automated community and others. Today, we're going to take a look at a couple things. Of course, if you saw the name of the episode, the J-Pow effect. So we're going to talk a little bit about that gentleman and his effect on the market and certain strategies. And then we're going to take a look at our results from last week and a couple other things. We'll have a few announcements for the audience here. So if there are any questions, as always, do not hesitate to let us know. Put it in the chat. Whatever questions, no bad questions. So Ben, I will hand it over to you. Actually, I lied. Just for anybody who's not familiar, PeakBot, automated options trading platform for the retail trader. Set it and forget it. You pick the stock. Our bots do the rest. We take these time-tested, well-known strategies and we automate them for you. We are not financial advisors. This is not financial advice, but we do provide you a watch list in order to select from. And we also have an alert service coming out. We're going to get into all that. So Ben, I'll kick it to you and let's get into it.
All right. I will pull up the watch list here and we'll start out like we normally start out, reviewing what the watch list is looking like this morning. So let's get that watch list on screen. There we go. And again, for anybody new that hasn't seen this, we, as Dillon mentioned, are automating time-tested options selling strategies. Important to know, options selling, right? We want to be on the credit side of things. It allows us to kind of give ourselves a better chance of winning, right? It's very mathematical based, very statistics based. So we can kind of set what we want our win rates to be. Not that that's going to happen every time, but we know that over the course of, thousands of trades, we will achieve our expectation. And that's going back to the central theorem, limit theorem, and the law of large numbers there. But anyways, the numbers that you see on screen here are for our weekly wheel strategy. So opening a position on Monday. If you miss Monday, our automation will open it for you on Tuesday. If you miss Tuesday, well, not enough meat on the bone at that point. So you're going to have to wait till next week. But these are essentially the positions that the automation tool, the bot, if you will enter in for you if you choose these tickers. So if we look at the top of the watch list this week, we've got Southwest Airlines ticker LUV at the top of the watch list, trading right around $28. And honestly, Dillon, for me, that's a sweet spot. Between $25 and $50, those are typically the dollar amounts that I like to wheel. Because if you do get assigned, you don't have to have that much cash on hand. And you can see here, you need about $2,700 in cash in your account in order to place this trade. The max loss on this trade, so the most you would lose on this trade, and this only happens statistically 10% of the time, the most you would lose is $100. And that's just based on the size of the spread. If you scroll right here, you can see what the spread that the bot would set up would be. So we would sell the 27 strike. And again, we're on the put side here because you always usually start out the wheel on the put side, selling cash secured puts, or in our case, we're actually trading what's called the vertical wheel. So we're selling a put credit spread instead of just a cash secured put. So we're selling the 27 strike and we're buying the 26 strike. That's going to net us a premium of $14. Now, when you take that $14 and you divide that into the $2,700 in your account that you need to place the trade, you're getting about a 0.5% return. And again, talk about sweet spots. That's right where we want people to be when automating with PeakBot. We want everybody to see about a 0.5% to 1% return each week. And when you look at that return over the course of the year, that of course compounds and has a great compounding effect. And actually, last year and actually the last 52 weeks to date, we just got the data in for that last night, so that was pretty cool. The average PeakBot trader on the wheel made 33%, almost 33% flat. It was like 33.02%.
Yep.
So fantastic results that our traders have seen. And if you look at the market in that time period, it's beating the market compared to where we were this time last year to now. So very, Dylan and I are very proud of the platform we've built and the automations that we've got. And we highly encourage you to utilize utilize the automations. If you don't want to utilize the automations, though, you can use this watch list on your own. We have a bunch of people that come in here, trade manually, and they use this tool. It updates every hour on the hour during trading windows. So in about 20 minutes or so, this list will update again. Southwest might get bumped from the top spot here, but we'll see here. So the way that this watch list is organized is we first sort by risk level. So lower risk towards the top, moderate risk, and then we get down into higher risk tickers. It looks like a bunch of high risk tickers this week.
Well, I was going to say a lot of moderate, a lot of high risk. You get almost no low risk, which is not usual. Normally you see between, first of all, there's no neutral lower. It's just 4 bullish, 2 bearish, and we're heading into moderate. Yeah. It almost looks like, honestly, that's the first time that's ever happened with that few low risk stocks on the watch list. I almost want to think it's a miscalculation, but I don't think it is. It's just maybe we have a volatile market this week.
Yeah, which is interesting because we've got a short trading week, right? So Wednesday, the market's closed for Juneteenth, no trading. So when you factor that in, you're actually in these positions, you have less exposure, less risk than you would on a typical 5-day week, because there's less time for that stock price to move out of your favor. Now, again, we are trading credit spreads here, so we want everything to expire out of the money. So if we're selling the $27 strike on Southwest, we want that stock price to be above $27 at expiration. So basically at market close on Friday. That's what we're looking for here. So again, you could use this watch list, trade it manually. But Dylan, you bring up a good point in terms of volatility and how we might want to consider different events that happen throughout the week when we're setting up our automations. And that brings us to the title of the show, the J. Powell effect. So J. Powell, who is J. Powell? Jerome Powell. He's the chairman of the Federal Reserve. And why is he important? He's important because every, call it 6 weeks or so, the FOMC, which if you haven't heard of FOMC before, it's the Federal Open Market Committee. They'll come out and report on a bunch of different things, and typically what impacts the markets are interest rates, right? So if we think about if the Fed says, hey, we're going to raise interest rates, typically the market will dip down a little bit, and we'll get into why in a second. If the Fed says we're going to cut rates, then the market might see a boost. So you'll see this all over Twitter. It's talked about all the time. Every time there's a FOMC meeting. When you're trading during FOMC, I like to avoid like a daily strategy during FOMC days if possible. So like our Iron Condor strategy, for example, 1 DTE, I'm going to likely sit out on FOMC days just because you don't know what's going to happen. Again, it's minimizing those external factors that could affect price negatively or against or out of your favor. We want to try to avoid that as much as possible in trading. So FOMC, if interest rates go up, Why would that cause stock prices to go down? Well, if rates go up, if you think about companies, because ultimately when we're buying and selling stocks or even options, we are investing in companies. And if they have a higher interest rate, well, then that's less money for that company to keep, reinvest, or distribute out to shareholders. Honestly, to do whatever they want to do with that money. There's less money for them to do that because they're paying higher interest. Now, if rates are cut, there's more money because they don't have to pay that out interest. They have the money in hand to, again, spend it how they want it, give back to their shareholders, and increase company value, because that's the goal of public companies, is increase value for their shareholders. So what happens, and I'm going to pull up my Tradier account here, what happens during an FOMC day? So I've got the SPY pulled up because this is where you can most clearly see the quote unquote J Powell effect, right? So Jerome Powell is typically the one speaking during these meetings. And I've got a chart from June 4th all the way up until June, it looks like 11th pulled up. And we could see there's some gaps here. Like we could see between the 4th and the 5th, there was a bit of a gap up here. And then we can see a steady increase, maybe some choppiness towards the end of last week. But the reason why I wanted to show this is because when we move over into FOMC day, you can see the huge gap that formed between the 11th and the 12th. So the 12th was the last FOMC meeting. So that was last week. And you could see that the market was anticipating, it looks like, because prices went up, or the stock price went up for the SPY, it looks like the market was anticipating that the Fed was going to cut rates. And I think they did say that there was going to be one rate cut, at least in the near future. So based on that speculation, we saw the price of the SPY jump dramatically overnight. Now, during the day, the FOMC actually starts at 2 p.m. Eastern. So if we zoom into our chart here, harder to tell because a lot of the price has been assumed in by that point, but it's this candlestick right here. So we did see briefly a pretty big drop down, but we caught a point of support, and then that price quickly rebounded, and it wasn't until later in the day that we saw a bigger move down, and it kind of stayed there until close, and then at close bumped up, and then we see going on from there, the stock price was pretty flat, and it's still flat moving into today. We see pre-market today, SPY trading at 542.62, so just below Friday's close. But as we can see, if we were trading the Iron Condor, for example, on June 11th, so that Tuesday, we would have gotten in right around here. And again, at least the way PeakBot trades the Iron Condor, we're selling the 25 delta. So the strikes that we probably would have sold, at least on the call side, were probably like the 538 and the 539 strike. And we can see, just because of the J Powell effect here, we would have lost. We would have lost that trade, and yeah, that would not have been a good day for PeakBot traders. So just to reemphasize the point, it's always important to know when there are external factors affecting your trades, and then you have to learn how and honestly decide how you want to handle those external factors during your trades. Now, as it relates to our automations, we are actively talking about and considering sitting out on certain days like FOMC meetings, especially for our 1 DTE trades. We're also considering earnings, right? Dillon and I always talk about earnings, and be careful when you trade a company during the week of its earnings. So we're considering maybe we sit out with our trend spread or with our wheel strategy if that company is reporting earnings, because you as the automator, you're not going to be checking this all the time. So we realize that you might not even be aware that a company is reporting earnings, or you might not be aware that the FOMC is going to meet, and that's going to affect your holdings. So we're actively thinking through how we can best mitigate that risk via our automations. Dillon, you got any comments?
No comments. It's no secret that of the group here, I'm the layman when it comes to, trading and technical analysis and the impact of things like this. I like to do my best to try and, as silly as this might sound, try to ignore it, right? Because I want to keep my emotions out of it when I pick my stocks, especially through PeakBot and I'm automating them. I'm just picking stocks that I'm comfortable with and that I feel good about in the long run. So regardless of the impact of these, news events and everything else, and I just try to, my mentality is get through it, right? I want to pick quality stocks that, sure, every, things like this are going to, have an impact on every stock at some point. But no comment for me. I just push through. So no, good breakdown though. I think a lot of people should be aware that, there are events that can really switch things up in the market. And look, the more aware you are, the better, but try to keep yourself in check. Like, don't be going and making any dramatic moves with your portfolio. Not financial advice. I should certainly don't take it from me, but no real comments there. But great job, great breakdown. Um, what's the next thing we want to get into here, Ben?
Let's hop over into your account.
Okay, so I'll pull up my screen here in just a second. We're going to take a look at a few things here. So I'll get this pulled up. What we'll notice here is, of course, this is my PeakBot account. This week, I am, as always, trading the wheel strategy. Been wheeling and dealing for, coming up on 2 years now. Again, just a reminder, I made 34% last year on the wheel strategy, which matches almost exactly with the average that Ben had mentioned on across all traders on the wheel with PeakBot. That wasn't last year. It's just that stat was the last 52 weeks. But we're going to take a look at Alcoa Corp and JD here and see if I would like to continue with those. So I'm going to search this. I'll zoom in here just a second, and let's see what we can do here. So we're going to take a look. I don't believe Alcoa Corp is even on the primary watch list right now, which is interesting.
That is interesting.
Which that tells me a couple things. In fact, here, I'll just do it. I'll pull it up like this. I wonder if it is on the high risk, low premium side of things. So again, I'll zoom in a second. But all right. So Alcoa Corp, all of a sudden, if you guys can see here, is now on our secondary watch list. Again, there's tabs on our watch list. This one has fallen into the very high risk category, which is interesting. It hasn't been there in a while. Come on, what happened here?
Well, you know what? It's interesting. A lot of the stocks on the watch list this morning are at an elevated risk level, it looks like.
Yeah. And
so I wonder if this is a side effect.
Yeah, maybe it's the FOMC, maybe it's the short week, but Alcoa Corp, I'll tell you this column here, which I know we're not at the top, so you can't see it, but this is our spread. This is normally $1.50. It's now, doubled, if not more, with a spread of $3.50. So if we take a look at our strike prices, we got 33 and 36.50. The stock is trading at 37.90, which seems like a good amount of breathing room. It's a 1.34% return on the week. So when we take a look at $49 earned in premium, which is higher than it normally pays. I think the last few weeks I've been making less than half that, 22, 25 bucks in premium. I'm going to look at on Tradier, I'm going to pull up their research tab. And by the way, for anybody who's not trading on Tradier, check out Tradier Pro, $10 a month, commission-free options trading. In fact, we'll get into this in a second. The reason I'm not trading our most popular, my favorite strategy right now, the trend spread strategy, which is in beta becoming live, is because I'm moving all my cash from my Schwab account over to Tradier to save a ton on fees. So let's look at this here. If we take a look at the 1 week for Alcoa, it is still in our favor. We're still seeing a strong buy and a lot of neutral only 5 cells for technical analysis on AA. I don't hate this. However, I got to say, that spread, almost doubling in size from where it's been over the last few months kind of makes me a bit nervous. So we'll take a closer look at that. Before I make any decisions, I'm going to also try to find JD on here. I wonder if JD is on this list as well. It's not, which tells me it's likely on the front one, and it is. So here's JD.com. I've been trading this for quite a while as well. So right now, bullish trend, moderate risk. Again, just so everybody knows, our trend is based off of our 67-day EMA. Okay, so basically the 3-month, 3-month exponential moving average. We're also judging our risk level based off of the volatility of the stock, the size of the spread compared to the cost of the stock. So JD, this is where we normally see it. We got a $1.50 spread. If we scroll over a bit, we'll notice our strike prices. This is, again, a put credit spread. So when we sell a put credit spread, our sold put is at the 30 delta. Okay, so that's 27.50, and we buy a put at the 10 delta, closest to without going over, and that's at $26. So we got over $1 of breathing room from where it's currently trading. It's paying 0.65% return this week. That's $18 in premium based on the $27.50 I would need set aside just in case I get assigned my shares, which again only happens about 20% of the time when we take into consideration the max loss is also a possibility. If we go under the $26, we wouldn't take the shares, we'd just take our max loss. So let's look at JD on the technical analysis as well. Let me just pump this in here. By the way, we'll take a look at the 1-month chart. JD has had an interesting month here. We kind of dropped down into this level here, and we've been trading on it for quite a while, coming back to like really the 24th of May. It's been kind of finding its zone there. When we look at it for a week, we're seeing a strong sell here. So this is not necessarily what you want to see when you're selling the wheel strategy, okay? Because I don't own the shares. I'd be selling a put credit spread this week. Not digging this. We got 11 sell signals, 9 neutral, only 6 buy signals. That doesn't necessarily do
And you
it.
know what, Dylan? When you
Yeah.
look at JD historically, even though it was towards the top of the watch list for quite a while, we've got 22 weeks worth of PeakBot data on
Yeah.
JD, and it's only won about 59% of the trades. So actually, out of those 22 weeks, it only won 59% of the 22 weeks. It's averaging about a 0.9% return, but that's definitely a lower win rate than we'd want to see there.
Yeah, and what it tells us is 2 things. A, it's underperforming because we're expecting around a 70% win rate, right? With when we're selling the 30 delta over time, we would expect that number to get back up to closer to 70% win rate. So, we're expecting it to improve, but right now it's not doing exactly what we'd love for it to do. So, I'm going to come to PeakBot here. I'm going to get rid of both of these. So, I'm automating close to 10K. I was doing 2 put credit spreads on JD and 1 on AA. So, I'm going to remove these just by selecting them. And by the way, again, this is fully automated. All I'm doing here is getting these stocks out of my portfolio so they don't trade today. A quick reminder, when you click remove here on the PeakBot platform, I'm not in any active positions here. They expired on Friday. But if I was in an open contract or an active position and I held shares and I was to remove this from PeakBot, it is not going to sell your shares. It is not going to close your contract. It is simply telling the bot not to enter into another position or open another contract. So for me, no harm, no foul, because I have nothing active. But let's get back into the watch list, and I can quickly come up with something that I feel pretty good about. I do like this Southwest Airlines. Again, it is a sweet spot. It's a cheaper stock. we have a low risk here, okay, with only risking $100. And this is right in the sweet spot of 0.52%. Let's take a look at love on the Tradier technical analysis here. So let's pull up the 1 month chart just to give it a little look-see here.
Kind of a choppy, but still somewhat neutral chart.
Yeah, no, it is.
Not
Let's
terrible.
see here. I'm gonna go to 1 week. Oh, that's not what we want to see.
Yeah, I was about to say too. I just pulled up PeakBot results. We have 13 weeks automated on love, 61.5% win rate, so lower than that 70% mark, and it's returning on average about a 0.6% return per week.
Let's take a look at a couple others here really quick. I'm going to also look at Bank of America. So sorry for all the zooming in and zooming out, people, but I'm just trying to navigate. Now that's a steady chart for a year. Let's look at the last month. Again, a little chop here, but let's go ahead and look at technical analysis for 1 week. This is more like it. This is what I like to see if I'm wheeling a contract here. So 15 buy signals, 9 neutral, only 2 sell signals.
And you know what, Dylan? We've got 22 weeks of data on Bank of America. We've got a 91% win rate on that.
Give me some more of that. All right. Even though we get no, when the stock is winning 90 some odd percent of the time, we do expect for that to come back down to reality. Again, you've noticed this. If we're seeing a win rate above 90%, we know statistically over time, if we continue to sell the 30 delta and stick to this predefined strategy, that will simmer down a bit. Anything below 70%, we expect to rise up to that 70% win rate. But for right now, $3,800, I'm going to sell 2 contracts on Bank of America. I really like how that looks and feels. So again, this is the power of automation here, people. This is how simple PeakBot makes it for you to put a stock trader in your pocket on a strategy that wins 70% of the time. I'm going to select my bot. I'm going to go with the wheel. Stock, I'm going to do Bank of America. And I'm going to do 2 contracts here. So I'm setting up 2 put credit spreads on Bank of America set to enter today. Okay. Expiring this Friday. All right. So we're ready to rock and roll here. There's one other one I wanted to look at because normally I'd activate about 2,000 more than that. I just want to see if there's anything else I'm digging here on the watch list. And again, this is why we tell people with a low account balance, there's only so much you can do. But this Chewy right here fits into my budget. Palantir does as well. These are higher than I would normally, I try to stay away from high risk, but I also, again, it's under my 1%, that the rule that I typically keep myself to. So let's take a quick look at a few here. Chewy, Palantir, Norwegian Cruise Lines, all around that 2K that I want to put aside. So I'm going to pull these up.
Dylan, I'm gonna give you some info here, and you let me know if you want to continue going down this path, because Chewy, we've got 29 weeks worth of data, 66% win rate. Palantir, 32 weeks worth of data, 59% win rate, and Norwegian Cruise Line, 17 weeks worth of data, 59% win rate. So all below 70. Chewy is definitely looking the best. It has 29 weeks worth of data. But
Okay.
I just wanted to tell you that before you went out and
no, that's
here.
Really helpful. When we saw a spike back at the end of May, but we've kind of been trading in this channel here for a little while. I'd like to think that, it's got some breathing room here. 11 buy signals, 8 neutral, 7 sell. Doesn't suck. What was the other one? Palantir. Let's look at PLTR. And by the way, everybody, this is my process. I'm not overcomplicating things here. You can if you want, but I try to stick to my fundamentals here. So Palantir, let's take a look. 1 week. That is going to be hard to argue with. Only 1 sell signal from a technical analysis standpoint. What was the third one I was looking at, Ben? Norwegian
NCLH.
NCLH. Chop there over the year. 1 month. Ooh, big drop. back on end of last week. So that's interesting. Yeah, this isn't looking so hot. And I didn't have a good feeling. I don't have success, me personally. I have not had much success with Norwegian cruise lines. I'm gonna go. I'm gonna go with Palantir. That was hard to argue against. I think this is a very good quality stock for this price. A lot of people love to trade Palantir. I'm gonna jump in this week. I'm gonna earn $18 in premium for the
Yeah.
22.50. I'm gonna set aside.
You know what? Thomas and I were looking at Palantir, I think it was last week or 2 weeks ago when we were live trading. By the way, anybody that's interested, myself and Thomas will be live trading these strategies that we're talking about. Dillon automating will be live trading manually today at 2 p.m. Eastern on my Tradier account. So tune in. We'll be posting that on YouTube, X, and LinkedIn. But yeah, we were talking about Palantir a couple weeks ago, and it was trading within a channel of like $21 to $22, and it recently broke out of that channel. If you want to pull that back up, and now it's trading above the $23 range. So yeah, if you go to like the 3 months, you can kind of see for about a month it was right between 20, 21, and 22. So like from middle of May to the middle or beginning of June, it was trading between 20 and 22. That's what the channel was, and then it recently broke out, and that's a bullish sign there that it broke through resistance at the $22 price, and it hasn't gone back down there since. So Palantir looks like a pretty decent play, in my opinion.
Yeah, I like this. This is a 6-month chart. Yeah, I'm happy with my decision there. And again, like remember, people, if you're going to be changing up your portfolio, doing a lot of this today. If you're going to be changing up your portfolio, stick to your strategy. I'm being more active than normally I would be, but again, when you see a shift like that on the watch list, a lot of your stocks that are normally low to moderate risk are now high to very high risk from our standards. It means things are going to be shaken up a little bit. So I want to make sure that I feel good. I set aside my time, happens to be out during this live show, to make these decisions, not get emotional. So I'm switching things up. I like this. Bank of America, two put credit spreads that'll be entered for me today between 11 and 12 o'clock Eastern, and one on Palantir. So you'll also notice normally with trend spread, I'm locked and loaded here with anywhere from 6 to 10 different stocks running even more contracts because I'm doing multiple per. I'd say I normally run probably about 15 different spreads on Palantir in an average week. Not this week, because I am moving over my capital to Tradier. Okay. I have money in my Schwab account here. I won't have this pulled up too long, but for the point of, getting people to understand that I'm paying a lot in fees here. If we take a look at my history, you can see this getting added up very quickly.
Dylan, I'm actually curious if it's fast enough, if you could like download this into Excel and you could figure out what the fees were. I'm curious to know, like in the past, I don't know, a year to date, call it, how much have you paid in fees?
So I'll do that. Maybe I'll kick it back to you. When I have that data, I will let everyone know. So Ben, what else was there for us to review here? Did you want to take a look at any of your trades? I know we have other shows throughout the week where we take a deeper dive, but anything
I'll pull up my Tradier account now, just to show I've got some open orders this morning, and then take a look at my open positions. Then I could quickly go through what my gains and losses were last week. So I've got a couple of open orders right now. These are on my 1 DTE iron condors. Now you'll see there was a bunch of cancels this morning. I went in and canceled those. If you are in our beta test group for the new iron condor strategy, you might have to do this as well. There's a slight bug. Again, we're in beta testing, right? So these things are going to happen. We set a market order versus a limit order. I say we, the bot did, the code did. So we are great bug to catch before we actually push this live. So if you are watching and you're part of our Iron Condor beta, not going to be a big deal if you don't change this. You're just going to get out of your position as soon as the market opens. But for me, I want to trade the strategy. So I just I canceled these. I set a limit order on all legs at 5 cents because that's where we're going to close each leg at 5 cents on my SPY and the Qs. So that's my open. Those are my open Iron Condors. Now, if we look at the positions I took last week, I opened up 6 positions and I actually took profit, or sorry, 7 positions, and I took profit on 6 of them pretty quickly. So I hit my 60% profit target on 5 tickers, which means, and I like to stage out my take profits by day. So if I get into a position on Monday, on Tuesday, I want to see a 60% return. If I don't get that, I want a 70% return on Wednesday. If I don't hit that, I want an 80% return on Thursday. And then if I don't hit that, then on Friday, I'm still shooting for that 80%. Otherwise, I will roll. So I did hit my profit target on 6 of the 7 tickers. I gained about $573 in premium. And then I had to deal with a firm. So a firm on Thursday wasn't looking so great. And I knew that and I'll pull up the chart here. I knew that on Friday, I wasn't going to have a lot of time to actually trade. So I actually rolled my position manually because, again, I'm trading these positions manually. Again, you can follow along with me 2 p.m. Eastern on Mondays, live on X. But I knew I wasn't going to be able to trade. So I rolled manually on Thursday. And it looks like the roll is turning out to be pretty good. So I was trading the 31 strike. That's my sold strike, and buying the 33.50. If we look at how a firm was trading on Thursday, of last week, we can see that it was well above the 33.50 strike that I had bought as my hedge. So I was looking at a max loss there. And then we did see the price decline coming into Friday, and actually going all the way into Friday. If I had let my position expire, which, again, trading trend spread, that's typically not going to happen. But if I had, I would have actually just expired out of the money because, again, I was selling the $31 strike here, and the closing price was $30.92 on Friday. So I would have been just out of the money, but I wasn't. I rolled my position, which, again, not upset about that, because when we roll, we like to set it up so that way we're collecting more of a credit. And I think this roll turned out to be pretty much flat. And the stock price is trending in my favor right now, and it's currently trading below the sold strike price. So this whole affirmed position is currently out of the money, which is exactly where I want it to be. So now we just have to go through this week. And again, these contracts will lose value throughout the course of the week. And you can see as of right now, my if I net these two, my gain of $1,200 here, my loss of $650 here, I'm looking at about, I don't know, $550 gain on the position right now. So I'm pretty happy with where this is at, and I'll let this go until the end of the week. But I will be getting into new credit spreads today. Again, live trading. Dillon, did I stall long enough for you to figure out your fees?
Yes.
Okay,
You did.
great.
I had it done in plenty of time. No, but so, in fact, why don't I pull my screen back up here? It's just going to be a boring Excel document, but
You're gonna have to zoom.
oh, I know. So this is a exported transaction history from Schwab. Okay. It also takes into consideration my TD Ameritrade trades before they transitioned back on May 13th. Again, the only reason we're talking shop here with other brokers is because we want to paint the picture as to why it makes so much sense to move over to Tradier. So
you told me you knew you had to zoom in, but it still
is that
can't
not
see.
enough? All right, so hold on. We're gonna get in there. Maybe we'll throw our faces away just so the screen enlarges. If our there we go.
That's
All
better.
right. So I'll zoom in even more, but I want people to understand that this column here, fees and commissions, I'm going to grab this, go all the way down to the beginning of the year here. Okay. So now I've gone past it. Let me just go back up a bit. So when we look at trades going back to the first day of the year, we can see down here in the column, it's very small, but $356, okay, in fees, just from the beginning of the year till now. That adds up. Okay. I mean, if we're talking on Tradier Pro, $10 a month, it's only June. I would have only paid $50, $60.
But you would have saved $300.
I've paid an extra $300 in fees on Schwab.
And
no good.
on a $15,000 account, which is roughly where you're at, that's a 2% fee. If you think about it, $300 is 2% of $15,000.
Yeah.
And you're just throwing that away in fees.
Yeah, it that's killer, because Schwab charges 65 cents a contract. With the trend spread strategy or our iron condor, we're entering multiple legs and closing multiple legs every single week. So you're talking like $2.60 per spread that you're opening by the end of it. So I'm getting rid of that. I'm moving over. In fact, the portfolio, the stocks that I added this week, Bank of America and Palantir, I might honestly remove those. I don't even want to. I want all my cash moved over. I'll probably put those into I'll probably end up putting those into the cash that I have on my Tradier account or one of my other ones. But yeah, I needed you guys to understand the value that Tradier is really providing here. Even if you didn't do the Tradier Pro for whatever reason, maybe you're not trading enough contracts weekly or monthly for it to make sense. It's 35 cents instead of 65. So we're cutting that down in half, pretty much. So just keep that in mind. So again, quick note, that account on May 1st was at 13,141, just slightly over $13,000. Today it's at 16,1. So I'm up $3,000. I'd be up more. I'd be up 3.5, 3.5K almost.
An extra
2%. But so yeah, Tradier Pro, maybe I'll put it in the chats. If you don't have a PeakBot account, I'm sorry, either if you don't have a PeakBot or a Tradier account, just visit usepeakbot.com/Tradier. Okay. And I just put it in the chat, at least on YouTube. It's on the screen here now. Check that out. We have a question that just came in. Maybe we can throw that on the screen and we can answer it. So Masood asks, could we talk a bit about the smart exit button? Yeah, absolutely. And I would assume that that's being that is with the trend spread strategy is
Iron Condor as well.
It's in both. Well as the Iron Condor. So let's talk about that.
In beta right now, but yes, great time to talk about it still.
Okay. So you know what? What I'll do is I'll pull up my screen and we'll take a look at our smart exit button. So that'll be coming up here in just a second. Now, a reminder, I actually just utilized the smart exit feature with PeakBot to get out of all of my trend spread positions. You'll notice when you look at when we had my broker account up on Schwab, I didn't have any of my stocks trading on the trend spread strategy because, again, I'm moving my cash. But when we look at the Iron Condor here, so I entered 1DTE SPY contract on Friday. That's set to expire today. So if, for example, I did not want to enter a new Iron Condor today, which in fact I don't. This is working out. This is great timing. If I wanted to stop the bot from entering any new contracts or positions, I can hit smart exit. What it'll do is it will get me out of my current position, okay, my current contract, without opening a new one. So I'm going to click on the active button here. I'm going to have my options that get pulled up. I can pause, play, remove, and smart exit. So when I do that and I save this, you'll now notice that under Iron Condor, it's set to exiting, okay? Which means today, prior to this position expiring, you can see my SPY condor here. All right, so it's going to close this out. And Ben, maybe I'll hand it to you to talk about how it's going to close it out before expiring. But it's not going to open up a new one for me today, which would be set to expire tomorrow. So go ahead.
In short, the smart exit button is going to get you out of a position, and it won't get you into new, and it'll get you out of a position the way that the bot's designed to get you out. So it's not just going to sell your position for you as soon as you set it to smart exit. It's going to be smart about it, right? By the way, thanks for popping the question into YouTube. Now, all of our Twitter watchers tend to be silent. Feel free to speak up, guys. Feel free to ask questions. We've got over 400 people watching on Twitter, and we've got, I don't know, 4 or 5 people watching on YouTube, and questions coming from YouTube. So let's go YouTube. So yeah, again, smart exit will get you out of a position the way that the bot is designed to get you out, and it won't get you back in. So yeah, if you're done trading a stock and you don't want to sell out of it, your position manually, or get out of your position manually as it is right now, you could set the bot to smart exit, and the bot will do it for you, and it just won't get you into a new position. And for the Iron Condor specifically, the exit criteria are: overnight, the bot will set a good till cancel limit order on both legs of the Iron Condor. So on the Iron Condor, you're selling both a put credit spread and a call credit spread. Now, we get into those positions at the same time, but we exit them at separate times. We set a 5-cent exit for the put credit spread and a 5-cent exit for the call credit spread, because we want the price to drop down to that, and that's where we'll buy them back, close out of that position. Now, if one of the legs or even both of the legs aren't closed by 3:45 p.m. Eastern, so 15 minutes before market closes, then we will cancel those orders. The bot will cancel those orders and then place market orders to get out of your position. And we do that so that way we avoid assignment. And we just don't want to deal with any shares when we're trading the Iron Condor strategy. So that's a defense mechanism against that. But yes, you would use the smart exit if you were done trading a particular ticker you didn't want to get into a new position.
Excellent question. Thank you, Masood. Now, we've gone a little long. We got about 12
Market's
minutes.
About to open. Let's wrap this show up.
Fantastic. So a couple quick things. Again, PeakBot's built to be easy, affordable, and transparent. I know we got another question here. We'll make sure we hit that. We have, again, for anybody who's been following us for a while now, PeakBot free trial. Not that we're boasting about this, but no more free trial. All right. Our platform works. We share all of our results. If you want to sign up and give it a go, all you got to do is connect your broker and sign up for your subscription. Between $19 and $99 a month. The only difference between our subscription tiers is how many contracts or spreads you can trade per contract. Additionally, we have our alerts system coming into play. And Ben just answered a question from the chat. It was the YouTube chat. The question was, when can you include XSP as a stock to trade? You can see it. XSP will be added to the Iron Condor strategy next week. That's in beta still, just a reminder. But that and other cash settled stocks will be added to the Iron Condor as we go here in beta testing. But again, alerts coming. If you don't have one of our broker accounts that you'd like to create or connect to, we will be sending alerts based on our strategies. And if you want in on any of these beta testing with Trend Spread or Iron Condor, let us know. You can text us. Maybe we'll just throw our number on the screen one more time. And again, it's 973-888-1166. Appreciate everybody tuning in. Again, we'll be live today. Later today, Ben and Thomas will be trading at 2 o'clock Eastern. So feel free to tune in on our Twitter, YouTube, and other socials at Use PeakBot. And we'll be live. Maybe we'll tease this. We're going to be coming back on the Tradier Hub. Not this Friday, but potentially as early as next Friday for an additional show. We'll be talking about our one trade idea that we'll be entering for the week and a couple other things. So appreciate everybody tuning in. Thank you so much. And we hopefully will see you at 2 o'clock today for some live trading with Ben and Thomas. Thank you. And we will see you at the peak. Take care, everyone. Have a good one.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.